Welcome back, fellow investors and financial enthusiasts. Today, we're diving headfirst into the unpredictable world of the stock market and how to survive its roller coaster-like ride. We've all heard the stories, seen the headlines, and maybe even felt the thrill or terror of watching our investments soar or plummet. From the legendary 1929 Great Depression crash to the bursting of the dot-com bubble in 2000 and the gut-wrenching 2008 financial crisis, the stock market has been a stage for some of history's most defining moments. We've also witnessed recent events like the pandemic-induced crash of 2020. It's times like these when investors are left gripping the safety bar, just hoping to make it through the twists and turns. But don't despair. There are lessons to be learned from history that can help us navigate this financial roller coaster. This is Capital Gains, and in today's video, we're taking you on a thrilling journey through the stock market's tumultuous past. We'll explore the causes and consequences of historical stock market crashes, and most importantly, we'll discover the invaluable lessons that history can teach us. Before we venture deeper into the lessons from history, let's start with a quick overview of what the stock market is all about. The stock market, often seen as a symbol of economic vitality, is a marketplace where individuals and institutions buy and sell shares of publicly traded companies. It's a place where the fortunes of companies and investors can change in the blink of an eye. While investing in stocks can offer tremendous opportunities for growth and wealth creation, it's also known for its volatility, uncertainty, and unpredictability. Investors have experienced the thrill of watching their investments soar to new heights and the agony of witnessing those same investments plummet. This roller coaster-like behavior is part and parcel of the stock market. The key is understanding that while the stock market can be a wild ride, it's a ride that can be managed with preparation and knowledge. Much like getting on a roller coaster, it's all about being aware of what you're in for, strapping in securely, and knowing the ups and downs are part of the experience. The stock market roller coaster is characterized by its peaks of volatility and valleys of uncertainty. To survive and thrive, you must learn to navigate these twists and turns. Now, you might be wondering, why should I invest in the stock market at all if it's so unpredictable? Well, history has shown that despite the turbulence, the stock market has consistently delivered substantial returns over the long term. In fact, over the long haul, the stock market has outperformed almost every other investment, including real estate and fixed income securities. The good news is, you don't need to be a financial genius to succeed in the stock market. It's all about preparation, discipline, and learning from history, which is exactly what we're going to do in this video. Now that we've got the basics covered, let's dive into the thrilling history of the stock market's most infamous roller coaster moments. We'll explore what happened, why it happened, and most importantly, what we can learn from it. Our first stop on this historical roller coaster ride takes us back to the infamous year 1929, when the Great Depression hit. It's a date etched in the collective memory of investors. The Great Depression crash was triggered by a cascade of events, including the stock market crash, bank failures, and widespread unemployment. It was a dark period in history, but it offers valuable lessons. Fast forward to the late 1990s, when the dot-com bubble was inflating at a rapid pace. Investors were euphoric about internet-related stocks, and many believed the good times would never end. But when the bubble burst in the early 2000s, countless investors saw their portfolios evaporate. It was a reminder that what goes up must come down. And who could forget the 2008 financial crisis, stemming from the subprime mortgage market? Banks and financial institutions crumbled, and the stock market plunged into turmoil. For many, it was a time of panic and uncertainty, but it also serves as a case study in resilience and recovery. Now, fast forward to the not-so-distant past. The year 2020, a global pandemic hit, and the stock market experienced sharp drops, leaving investors bewildered. The pandemic-induced crash was a stark reminder that external factors can have a profound impact on the stock market, but it also showed us that markets can recover, and often do so with vigor. Each of these historical events teaches us essential lessons about the stock market. It's not just about the crashes themselves, but the recovery that follows. The key takeaway takeaway here is that stock market crashes are not the end of the world. They are part of the market's natural cycle. What goes down will eventually go up again. The key is to have the resilience and knowledge to navigate these challenging times. Now that we've witnessed the heart-stopping crashes of the past, it's time to dig into the wisdom we can gain from these historical events. Each crash has left us with invaluable lessons to help us thrive in the stock market. First, importance of diversification. One of the most vital lessons is diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes to reduce risk. Diversification means spreading your investments across different types of assets like stocks, bonds, and real estate. This can help mitigate losses during market downturns. Second, avoid emotional decision-making. Emotional decisions during a market crash can lead to poor outcomes. History has shown that keeping a cool head and sticking to your investment plan is crucial. Emotional decision-making is a common pitfall. Selling in a panic or buying into hype can lead to poor outcomes. History teaches us to stick to our long-term plan, regardless of short-term turbulence. Third, the role of a long-term perspective. Investing in the stock market is not a sprint. It's a marathon. Historically, the market has consistently trended upwards over the long term, so don't panic during short-term fluctuations. A long-term perspective is invaluable. Just take a look at the stock market's historical performance over decades, and you'll see that it typically trends upward despite dips along the way. Fourth, the value of financial education. Knowing the basics of finance and investing can make all the difference. Understanding how the market works and having a solid financial education can help you make informed decisions. Learning the fundamentals of finance and investing equips you with the knowledge to make informed decisions. Remember, the market's ups and downs are a natural part of the journey. How you prepare and respond can make all the difference. Let's dive into some proactive strategies that can help you manage the volatility and uncertainty of the stock market. 1. Dollar cost averaging. This strategy involves investing a fixed amount of money at regular intervals, regardless of market conditions. It helps you buy more shares when prices are low and fewer when prices are high, reducing the impact of market fluctuations. 2. Setting clear financial goals and risk tolerance. Know why you're investing and understand how much risk you can tolerate. This will help you make informed decisions that align with your goals. 3. Having an emergency fund. Having a financial cushion outside of your investments can help you avoid selling assets at a loss during a downturn. 4. Rebalancing your portfolio. Periodically review and adjust your portfolio to maintain your desired asset allocation. Rebalancing can help you avoid excessive risk or missed opportunities. Investing in your financial education and having a clear plan can help you navigate the stock market's roller coaster with confidence and come out on top. Don't forget to like this video, subscribe to our channel, and hit the notification bell so you never miss our latest financial insights and tips. Share your thoughts in the comments and feel free to ask any questions you may have. Remember, the stock market roller coaster may have its ups and downs, but with the right knowledge and strategy, you can not only survive, but thrive. Thank you for watching, and until next time, here's to your financial success.